Hi, this is Jack from Alpha Charts with a state of the market video. Today is October 17th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my YouTube channel. And you can find me on Twitter all the time at AlphaCharts365. All right, so we're gonna start with the SPX, and I added in the RSI, the Relative Strength Index, to the bottom of this. I do use it every once in a while, but it's not my mainstay on my charts, as you can see, as you know, if you watch my videos. All right, but it's important here, I think, because we have this beautiful uptrend from the bottom, and we got to a new high here, kind of dipped back. We'll call it testing this, right? Testing this area, and came back up. And so we got really close to testing these highs and didn't quite get there. But if you look here, we got overbought very easily here. Great. We want to see that, right? That's no problem. It was a pullback, no big deal. We came back up. We couldn't get overbought again here on the SPX. So that's information that's interesting, right? If we would have got back up this way, I don't care about the divergence. We don't make it up above 70 or someplace close to that. That's a problem, I think. Um, could we grind higher or chop sideways and then go up there? Absolutely. Is the market still very healthy? I believe it is. And I'm still overall bullish on the market. But this gives me pause to maybe say a neutral stance, especially with the election was about 2 weeks away or so coming up. So that is, again, it's information. It's one piece of information. The trend is still higher. Everything is still moving higher. Would I be surprised if we come back and, kind of retest these lows? I wouldn't be totally shocked, and maybe try to put in, could this be a small double top here and then we get some kind of retracement and move higher? That's a possibility too. So my the way I'm looking at this market is maybe a little bit more on a neutral perspective until we can kind of get to all-time highs again and maybe get overbought again. Not selling anything en masse. Going to be I am going to be basically, as things do sell, whether they stop out or I hit my targets, I think I'm going to be just kind of letting that cash sit there as cash until I have a better feel on what's going on. Again, I think the uptrend is good and we are intact, but this right here, this is maybe a little bit more concerning than I like. So that's the SPX. But when we look at the Qs, we see it again, right? So we got back up just about to all-time highs again, right? Just real close to it. But we couldn't get overbought. And again, that is something that's information that's important. Is uptrend intact? Absolutely. But could we be seeing maybe some just more choppiness and indecision over the next few weeks? That's kind of what I'm thinking of, especially going into the election. It's a binary event, right? There'll be a winner, there'll be a loser, and the market may react differently depending on who wins. We don't know. But with all that being said, we can basically we can choose to manage our risk in different ways. Again, this piece of information I'm a little worried about. Looking at the WM, actually it looks a little bit better, right? So the small caps are looking better than maybe the SPX and the Qs. But we'll see what happens with that. I don't know. Again, the uptrend is intact in all these major indexes. Just something that I'm watching. If we go to the some important sectors like XLF, financials are still just meandering along here. Can't really get much going. Earnings season, so they're all reporting this past week, and next week a whole bunch more reporting. So lots of stuff going on with the financials. Again, it's just been mostly a choppy mess. If it can get back above 25, call it 25.75, I think that we may have some more room to the upside to this $30 range, but for the most part, so they're not breaking down, and they're not zooming higher. So again, it's not a terrible thing. Just means that they need some more time. Looking at SMH now, SMH, the semiconductors. All right, so we had the all-time high here. We pulled back and made a new all-time high here. But, and I'm going to just move this up just a little bit so you can see, we got overbought here at this all-time high. At this new all-time high, we could not make it. All right, so that is a bearish divergence, right? So now, this is the level that becomes important right there. As long as we stay above this level, 180, we'll call it 183. As long as we stay above 183 in SMH, then no issues, uptrend's intact. If we start breaking below the 183, then the short term, you could have some issues going on, right? Again, the longer term trend still looks great. We're still in a bull market. I'm not saying that. And look how nice the 65-day EMA has been holding recently, right? So if we do pull back, that's an area that we can kind of watch to maybe also hold, for the next time. But there is a bearish divergence in the semiconductors, and so it's definitely something that we're gonna have to monitor and watch. Again, the price action here in semiconductors and in the Qs in general, this is kind of weak, really not positive price action, to be honest. I mean, it's just, yes, there's a gap here that looks like it was filled. Maybe that's all we need to do. But again, this price action felt like, like there was more going on here than the market was telling us. I know a lot of people are talking about this cup and handle right here, right? Oh, cup and handle is being formed. Great. When it breaks out, it's confirmed. At this point, it's just a potential cup and handle. So again, this is on the Qs. A potential cup and handle, sure. In 284, that's the level I want to see hold, right? It makes sense. It's an important Fibonacci extension from, when you look at, let's go to the weekly chart. I'm sorry for kind of jumping back and forth between charts, but if you look at the weekly chart, right? This is from the 02 lows to, right? The highs, the 2000 highs right here. So that's all this is. And now we extended higher, and going back to daily, right? If you see this, now price is now having some issues at that extension. Does that mean that we're going to top out here? I don't think so at this point. I don't. I mean, the trend is still higher, but it is a place of potential importance. Again, some weak price action going on, so on and so forth. XLF looking kind of meh. SMH, bearish divergence, a piece of information. Looking at lumber, lumber is trying to break out. We were I was real happy about that last week, and then boom, fell back in. Potential false breakout happening here. Serious divergence in lumber going on here. Okay, don't discount this piece of information either. Again, I'm not getting full board bearish here. More of a neutral stance on the market here. I think that there's some warning signs that we're seeing that it could be, at the very least, a little more choppy or volatile going forward. Doesn't mean that we're going to retrace 50% in the market. It just means that it may be much harder to make a dime in the market going forward over the next few weeks. Looking at, all right, so that was what I wanted to show you with the RSI. I'm going to get rid of that now because I don't think it pertains to the rest of my charts. Looking at SPX TLT, right? So are people bullish or bearish? I mean, this one looks okay still, right? I mean, SPX is outperforming TLT. All right, great. If we look at credit spreads. Okay, so here we go. So we want to see tightening of spreads, and we did get that midweek. and then it bounced right back up. Again, maybe a little bit of a false breakdown in credit spreads. If we see some of these levels start to be taken out, that would get me a little bit more bearish, right? So if they start to widen more, um, if this starts to retrace, or should I say fall, I think that it's more of a bullish scenario. But as of right now, we like this breakdown, but it popped right back. That is, again, maybe a little concerning. Want to see this low taken out, 156 level. Is if we can fall below 156, get to 155. All right, that's definitely a more bullish scenario. If we start popping up into 158, 159, especially, or if we take out, 161, that'd be a big deal. So credit spreads have a concern in there. Okay. Again, just one piece of information. Let's look at, let's look at gold before we move on here. So I wanted to show you, I've been trying to incorporate a little bit more of the gold in the charts. And we have this potential very big inverse head and shoulder. This is a potential bull flag within this. And now we're looking at this downtrend line right here. If gold busts through this downtrend line, this could be the right-hand side of that shoulder, right? And that would be significant, I think. And that would definitely say, gold could be a place that could outperform going forward. Let me just look at gold SPX. I didn't actually plan on this, but let's just take a look at what that looks like. Gold SPX. Yeah, I mean, so this is the big inverse head and shoulders on a bottoming pattern that I've been watching. So if gold can kind of come back and make, going into next year, I mean, outperform and then break out here, that would be a very significant development. And I don't think very good for equities overall. We're not there yet is big picture. This is big picture stuff right here. But I do think that if you get that gold break out of this line, we may be in an environment where gold, at least in the short term, is going to outperform. So I think we need to be mindful of that. Looking at silver, so here's silver. And so silver's kind of interesting here. So, this was resistance, broke through it, important area here, resistance here, broke back through it. And it kind of came down. And if we go to candlesticks, right, you can see it better. It came down and retested that area right here. And it was a successful retest. Now bounced higher. So silver is something I think we should keep our eyes on too. Because when we look at the silver gold ratio, right? Silver gold ratio, support. This was kind of support, broke down. This area became resistance, right? Broke out, came back, retest, right? This is the silver gold ratio, retest, moved higher. Very similar to the silver chart. Very, very similar, right? It looks almost identical. So gold could start performing really well. Silver could start outperforming gold. Those are things to be watching for. Again, if we start seeing those two things outperforming, there's a lot of different ways you can play it. Whether we could look at gold miners, we could look at other mining stocks and so on and so forth. But or you could just outright buy gold and silver, right? The ETFs. Why not? All right, so let's go on. Let's look at the VIX. VIX line chart. All right. We were making lower highs. We were starting to come in, going into, at the end of last week, and we've had a little spike up. One more piece of the puzzle, that volatility may be coming back into the market. So we've had now a few different things showing us to be kind of cautious going forward. Again, not to be full board bearish, in my opinion, more of a neutral stance. But that's VIX. VIX is saying, hey, maybe a little more volatility is about to creep into the market, right? Let's look at the put-call ratio. Still in this bullish, everyone's on one side of the boat scenario. Can it last longer? Absolutely, right? I mean, the signal is really when everyone gets bearish. This is a signal. This means we're in a bull market. That's how I read it, right? This signal, potential signal, this bull market, right? We barely got to, 0.932. That's not on a dime because other people say, but I am not bearish. I'm just in the short run, not quite as bullish as I've been in past weeks. And I may be wrong. And 2 weeks from now, we'll have the result of the election and other things, coronavirus stimulus, and who knows what else. Who cares, right? Because that will get priced into the markets, and these charts will look different. And it'll be a bullish looking chart. And no matter, I don't care who wins or loses, or it'll be a bearish looking chart, right? Um, and we'll have more information to go. But if there's reason for caution, might as well heed the warnings. That's what state of the market is for, right? That's what these videos are literally for, is to know what kind of trading environment we're in and where there are some potential risks. And I think right now there's risk being there's enough things that are showing there's some risk in the market for a more neutral stance. All right, guys. I hope you all have a great week. I hope that you guys trade safe. Stay safe out there. Take care.